For over 50 years, Fordham Co LLP has been providing accounting and other services to both businesses and individuals in Washington County and the greater Portland area. The firm understands the nuances of the ever-changing world of accounting and is here to assist in a wide variety of issues faced every day. Katie has a long and storied bio, being at many different accounting firms, also with Harsh Investments and a family-owned company, and was a past chair of the chamber back in, I'm going to forget the exact.
04.
04, so not too far after I started at the Hillsboro Chamber. So if I have any leadership skills at all, I learned them from this lovely woman. And I would just say, you know, what else I know about Katie is that she enjoys nothing better than, you know, a good storm at the beach, curled up by a fire with a nice glass of wine and reading through the IRS tax code. So God bless her that somebody's willing to do that. So I give you and present Katie Eyre.
Well, thank you, Deanna. I assure you, what I've learned in leadership, you had a big part of it. The Internal Revenue Code is one of the greatest mystery novels ever written, and so it's an endless story. I would like to also acknowledge Blair Walker, who is on the call. He is the audit partner here at our firm, and he's here as well. Thank you for that introduction, Deanna. Just a couple of things, general things, before we get into the thick of it. Deanna already mentioned about Fordham Company. We are in the business of business. We've been around, it's actually over 6 decades now. And our roots are in Washington County. This is our bread and butter. We were here in Hillsboro before it was cool to be in Hillsboro, and this is what we do full time: is advocate for our clients and advocate for business. And we have about over 20 of us here, and we're located in downtown Hillsboro. And we've just added 2 to our ranks, 2 new CPAs, and we're just kind of growing thanks to the ever-changing tax laws and accounting area. There's no shortage of things to learn in this increasingly fast-paced environment, faster than I can ever recall in my 3 decades of working in this industry. Some general information on the PPP loan. We're going to go through the details, but most of us on the call, most people in our neighbors that have businesses have already obtained 1 PPP loan. But so some of this may be a repeat, but we're going to talk about expansion. But what you need if you're considering a PPP loan is you need a banker, and you also possibly need an accountant or a very high level bookkeeper, controller for this to kind of walk through it. It's helpful to understand the general guidelines of what this PPP2, we're going to use some terminology, PPP2 is. And once you understand those guidelines, and because most of us have gone through the PPP loan process already, that will help us understand better the forgiveness calculations. I've done a complete slideshow previously back in April, and things have changed since on the technicalities of the forgiveness application. They have changed a few times since then. I'm not going to get into nuanced detail of what forgiveness looks like as far as how to fill out the forms calculations, but we will touch on the forgiveness when we look at going into applying for the loan, what that looks like. And then if you have any specific questions, hit the chat, and Deanna, feel free to interrupt me, and we'll also have a time at the end as well to go over some questions. And most off, because we are in a pandemic, ever-changing regulatory authorities and requirements as a business owner or running a business operations, just hang in there. We don't know where all of this goes. We don't really, quite frankly, know where we've been. We just know that it's not comfortable. So hang in there as we kind of work through this as a community. So the topics the specific topics we're going to cover related to PPP is the basics of the PPP. We're going to talk about PPP2 and who can borrow, the eligible use of the proceeds, and the eligible expenditures for forgiveness. We're going to touch on a couple of subcategories that are mentioned here regarding the eligible expenditures, the haircuts on the amount that's eligible for forgiveness, taxability, which thankfully has been greatly simplified now, and the SBA loan forgiveness applications. One of the things I do want to tell you, the forgiveness applications were just updated yesterday. Much of what we're talking about is less than a month old in information. We are drinking out of a fire hose. So what I'm presenting today is based on my best ability to digest the information. But we have had, since the Tax Act, which was signed by President Trump December 27th, we have had multiple guidance interim rules from the Treasury Department, SBA, reissuance of forms, on and on. So we're doing as best we can with the information we have. And Deanna, I'm wondering if you could give me a 15-minute warning if when we get to 10:45, so we have time. It'll help me pace and get to questions as well.
Absolutely.
Thank you. Okay, so let's get into the technical environment that we're dealing with the PPP loan. We should expect change. Since the first PPP loans came out with the CARES Act back in March of 2020, things have changed at such a breakneck speed related to PPP. We have three major things that are impacting the PPP and the guidance out there. And one is the election, the pandemic, and then the economy as well, which the economy is really a consequence of the first two, as well as things globally out of our control. The information is as of now, as I mentioned, already mentioned about the Treasury Department and the SBA are coming out with new guidance regularly. There's still some ambiguity, but it's a lot less than it used to be. And then there are financial statement impacts. That's where my brother Blair comes in on this. He specializes in financial statements. He's drilled down on the impact related to the forgiveness and what it matters. So if you have financial statements that you issue your bank or investors or whatever purposes, you talk with your accountant, contact Blair. What are your choices and how to represent that on your financial statements and what makes sense to you and your company's best interests. These are general rules, as I mentioned. And for your specific situation, I'm going to encourage you to rely on your tax advisor and your lender in your own accountants for the specifics on it. I just have to CYA our firm here. So the basics, as I mentioned, the first PPP, there's two primary acts that we care about here. Primary, there's some other things in between, but the CARES Act, which, think back, it was only, 10 months ago, March 27th of 2020, and that is the Coronavirus Aid, Relief, and Economic Security Act. And that is the one where the first PPP loans came out. Fast forward, well, after the CARES Act, there was a first round, and then they did a second round. And I think the loans for the first and second round of PPP closed on June 5th, if I'm not mistaken. And we have not issued PPP loans since. Fast forward to the Consolidation Appropriations Act of 2021, which was signed by the president 9 months later on December 27th of 2020. Congress allocated an additional $285 billion for PPP loans. They've made some specifically for the smallest of small businesses, and then they did some diversity allocations for loans to target things. And so that is what we're dealing with now. The Consolidated Appropriations Act specified some expansions from what we knew. It clarified some things, and we're going to focus on some of that. I would like to remind everybody what PPP stands for, and this is to answer some questions I get a lot from a lot of businesses, a lot of clients. PPP stands for Paycheck Protection Program, and I do want to emphasize it is the protection of paychecks, which means employee retention. And so this is really targeted at keeping people employed. It is not targeted at free money to use on anything you wish. It is really targeted at keeping people on your own payroll. And if you remember that, it will help you with how to spend your money and decisions to make. I get a lot of questions from people. Can I use it to buy, a computer? Well, that information's actually kind of changed, but it used to be no. Can I use it to buy a car or a truck? Generally, no. Those types of things. So it is really geared at paycheck protection, keeping your people employed. And then now it's expanded more into the running of your business. You borrow from the bank, it's a low interest loan. Most to all of it can be forgiven, and it's fully guaranteed by the SBA. The PPP2 just opened up for applications on January 11th, so a week ago. And you have to apply by March 31st, 2021. I believe it is just to apply, not to apply and then approved by March 31st, 2021. In general, we're not seeing the great emphasis by banks on going out and getting these loans. I think a lot of clarity has happened as far as what the SBA is actually going to pay them back. Banks make about 3 to 5% on the loan, so they get a loan origination fee on it. By that, so that's how the banks are making money, and then they do get 1% on these loans, which are relatively short term. The interest rate is 1%. The loans issued prior to June 5th of 2020 had a maturity of 2 years, but since then, any loans issued after that now have a maturity of 5 years. And the loan payments are deferred for borrowers who are applying for loan forgiveness until the period when the SBA actually pays the bank back for the money. If a borrower doesn't apply for the loan forgiveness, the payments are deferred for 10 months after the end of the covered period, which we'll get to in more detail for the borrower's loan forgiveness. But you are on the hook. If you don't get forgiven, you are on the hook for paying it back to the bank yourself for all or part of it. And the covered period generally is either 8 weeks or 24 weeks, but as we'll see with the new PPP2 loans, you get to choose a period between 8 to 24 weeks. No collaterals required or personal guarantees are required on these loans, and there's no fees that you as a business will have to pay attached to it. So let's talk about who can borrow. There's 2 buckets of who can borrow on this next round. They call it PPP2 because it's technically the third round of PPP loans, but the first 2 rounds were kind of under the same general guidance. They just gave another allotment of money to it. This time they've actually expanded and changed some things. The 2 types of borrowers are the borrowers who have never borrowed a PPP loan before. Those are first draw borrowers. That's the terminology that's generally used. And they've not borrowed before. There's another set that are still considered first draw borrowers, and those are ones that have taken a PPP loan, but are permitted in very limited circumstances to increase the amount of their loan that they took, or they paid some back, and they want to apply for the amount that they paid back because under current rules, they now qualify again. Very limited circumstances, and we'll talk briefly about that later. The next type of borrowers is second draw borrower, and those are borrowers that have previously taken a PPP loan, and each set of these borrowers have different criteria for borrowing and different allowance of how much they can borrow. But regardless of whether you're a first draw or a second draw borrower, you have to have been in operations on or before February 15th of 2020. And this is to help businesses that were hit by the pandemic. It's not to help businesses that started because or during the pandemic. And so some businesses actually started because of the pandemic. This isn't to help them. This is to help businesses that have been around and were hard hit by the pandemic. So first draw borrowers, we're going to talk a few minutes about first draw borrowers. They can be sole proprietors, independent contractors, self-employed persons. They can be any business. Most nonprofit organizations or tribal business concerns with up to 500 employees. And the 500 is important. First-time borrowers, we tend to use 500 employees. You'll see with second-time borrowers, that number tends to be 300. And if there's more than 500 employees, as long as they meet an SBA industry size standard, that's where you start seeing things like airlines. There's certain size of employees that certain industries are allowed to have that are greater than 500. And for hotels and restaurants, there's multiple, if they have multiple physical locations, they can apply for it even if they employ over 500 people, as long as it's not more than 500 per location. And as I said, in limited circumstances, a borrower who received the PPP loan can expand or reapply for part of it. The only one I really want to talk about and mention here, but there are a few others, again, very limited, is if you have a partnership, you may have applied for a PPP loan based only on your employees that the partnership employed for payroll type costs for measuring. Since the initial rounds of PPP, they provided guidance that a partner can also consider their net earnings from self-employment, not what they've taken out, but the net earnings from self-employment allocated to them. It can also count towards payroll for PPP loan purposes. If you were a partnership and did not include that in your prior loan, you can likely apply for an expanded PPP loan again and consider it a first draw. Maximum loan for the first draw borrowers this round is $10 million. And if you happen to be a group of corporations, it's $20 million. We do have, by the way, when we talk about these things, you still in general have to certify economic or uncertainty at the time you apply. I think we're all uncertain at this point. But if your loan is $2 million or more, you're going to have to prove your economic uncertainty. And I'm not sure if you have to prove that at the time of the loan application or at the time of forgiveness, but you will have to prove that out. So the bar and this, there is a safe harbor. If your loans are less than $2 million, the SBA will just assume that you were facing economic uncertainty. So the borrower, for first-time borrowers, they qualify for a loan that is 2.5 times their average monthly payroll costs. Now that's what we did in the first round of PPP loans. It was 2.5 times the average monthly costs. But for this next PPP2, what they said is you can choose technically one of 3 things. You can choose your payroll costs in the immediate 12 months prior to your loan application, or you can choose your annual payroll costs in either 2019 or 2020. And that might be helpful to you because 2019, you might have had more payroll costs than 2020 or vice versa. And so that is, you have some choice in how to elect what your payroll costs are. And then in addition, if you had an economic injury disaster loan that you took out between January 31st and April 3rd, you can actually include that into your PPP loan borrowings, and basically you're refinancing that emergency loan that you were given. The reason for that is, if I recall, and I didn't drill down on this little thing, but you used to be able to only take either the EIDL or the PPP loan in this period. And so if you took out an EIDL loan in that period, you might have been prohibited from taking out a PPP loan because of it. Now, if you take out a PPP loan, go ahead and just pull that in and refinance it all into one PPP loan. Let's talk about what eligible payroll costs are. This is a little bit of a slightly deeper dive, but this will apply for second draw borrowers too. So a lot of what we're talking about applies to both, but there are some nuances. So what's included in your eligible payroll costs? You can, as I said, you have your choices of the immediate preceding 12 months, 2019 or 2020 numbers for payroll. And they're basically relying on your Medicare wages and tips for each quarter in that period. Plus, you get to add in the pre-tax employee contributions for health insurance or other fringe benefits. And they've expanded they've clarified, I should say, what's included in the health benefits for an employee, and that's group health, life, disability, vision, and dental insurance. So you can add in the employee pre-tax contributions, and you also add in the employer contributions paid on behalf of the employee. You add in the employer retirement contributions made for the employees, and you add in any of the employer, state, and local taxes assessed on that compensation. And it's primarily the unemployment tax in this case. It's not federal employer taxes, it's the state. So that's what the eligible payroll costs are. And then we get to add to that, depending on what kind of taxpayer you are. If you're a Schedule C, again, you get to use your 2019 or 2020 numbers, and you can use a draft of what you think your 2020 return is going to be. In addition to the payroll costs for your employees, as a Schedule C, you get to add your net profit on Schedule C up to $100,000, or your Schedule F, if you're a farmer, up to $100,000, or your net earnings from self-employment up to $100,000 if you're a partnership. And so those will get added into what your eligible payroll costs are. This is an odd link. What I will do is I'll forward this slideshow to Deanna, and she can distribute out to you. This is a link that this information just came out January 17th of 2021, that the SBA provided some specific guidance that you can look through on your specific tax situation to see all the detail kind of behind this. But it's in general what I had just said. Sorry, I didn't have any more easier link than that. And so what if your business was operating February 15th of 2020, but you weren't operating between January 15th and June 30th of 2019? The reason why that's important is you don't have a 12-month period of 2019 payroll. You don't have a full 2019 payroll, you know, and then 2020 is a little bit short. In this case, this is for first draw borrowers only. Both cases, you're still eligible for the PPP loan, but you calculate your eligible payroll costs in one of two ways. You can use your 2020 eligible payroll costs to calculate your monthly average, or you have an election where you can take your January and February 2020 eligible payroll costs and divide it by 2 to calculate your monthly average. And you know, whichever math works out to your benefit is how you may want to use for your monthly payroll. Now let's move on to second draw borrowers. These are ones that have taken a PPP loan previously. And you will, even if you haven't applied for forgiveness yet, you can still apply for the second draw loan. So you've either already used it, and or you're going to use the full amount for authorized uses only. And that's important, the authorized uses. We'll get into more detail on that. You don't have any more than 300 employees, and you can demonstrate at least a 25% reduction in gross receipts in any quarter in 2020 between comparable quarters in 2019. So you're going to compare each quarter in 2020 with the same quarter in 2019. And if, oh, Rob is still, I'm going to go ahead and admit Rob Giesler. Sorry, I keep getting admitting, and I didn't know if you had control or not, Deanna. Okay, so what I do want to say about this, I have seen editorial comments on this a couple of different ways. Some people say you had to have had a 25% reduction in 2020 as compared to 2019. That is true. If you have an overall 25% reduction in 2020 over your 2019 gross receipts, you qualify. But the actual detail, and I believe the law says in any quarter in 2020. So if you have one quarter in 2020 that has a 25% reduction in that quarter in gross receipts over the same quarter in 2019, then you also qualify. Now, I'm going to caveat this a bit. I believe that is the intention of this law, but the actual guidance from the SBA says reduction in gross receipts in any quarter in 2020. It doesn't say in any one quarter, and it doesn't say in all quarters. It just says in any quarter. And I think the plain reading does mean if you have this 25% reduction in any one quarter in 2020 over 2019, it applies and you qualify. But I wish they would have put in any one quarter, or at least any one quarter, but they didn't put that in there. And so there is some subjectivity, but I do believe it is only one quarter. So that in order to qualify. And again, you have to apply by the 31st of March. Okay.
Katie,
Yes.
Brad Smith has a question. I'm not sure if you just answered it. What if the 25% reduction is 3 months over 2 quarters? Did you just answer that question?
I did not answer that. 3 months over 2 quarters. Oh, you're saying the 3 months is over 2 quarters, not in any one quarter? It appears that they are taking a hard quarter line. So I think it is looking at the calendar quarters, January through March, April through June, and so on. There is a little bit in there in the text, which you'll get, which in the link, I'm going to provide another link in the slideshow that you'll be able to go to that talks about if you're on a fiscal year, how to apply for it. And it also talks about if you have a short year in 2020 and what you compare in those cases. But I do believe, Brad, that they're talking about hard quarters, actual calendar quarters for the most part. Okay, now there we go. So the maximum loan amount for second draw PPP loans is $2 million or $4 million for corporate groups. You might recall first-time borrowers, it's $10 million or $20 million for corporate groups. So they've really ratcheted this down if you're a second-time borrower. So your maximum is $2 million, and it is 2.5 times your average monthly 2019 or 20 payroll costs, just like we saw in the first draw, or the immediate preceding 12 months of payroll. For accommodation and food services sector, again, meaning hotel and restaurants, the maximum loan amount for a second draw loan is 3.5 times, so 3.5 times your average monthly salary, up to $2 million. They define the accommodation and food services sector as those that have the North American industry code standard, or whatever that completely stands for, begins with 72. Look at your tax return if you think you qualify in one of those sectors, and make sure that your industry code begins with 72, and then you can qualify for a 3.5 times. If it doesn't include 72 and you file some tax returns, you may want to talk with your lender, and you do think you qualify in these sectors, talk with your lender and talk with your accountant about what that means. It could be that it's miscoded, so I would encourage you to do that. I am not sure, I did not see this in the SBA guidance, the detail, if you can refinance your EIDL taken out between January 31st and April 3rd for second-time borrowers. And I believe that's because you couldn't have taken a PPP loan out if you had taken one of these EIDL loans. So I think that's why it's not included in the SBA guidance. But when I look at the general, if you happen to have had one, I think you can still include that. That's the conversation you need to have with your lender. Eligible costs for payroll are the same as they were for the first draw borrowers, so I won't go over that. But this is a difference. What if the business was operating on February 15th of 2020, but you were in operation for the full 1 year preceding to February 15th, 2020? You're still eligible for this loan, but your eligible payroll costs look differently than first-time borrowers. You might recall first-time borrowers could actually choose between their actual 2020 payroll costs or January and February of 2020 divided by 2. For second-time borrowers, your eligible payroll costs are a little bit more comprehensive. They want you to look at when you started operations in 2019 and add up all your eligible payroll costs through the end of 2020, and then divide by the number of months of operations in that period. So they basically want you to figure out your average monthly payroll costs from the time that you started business to 12/31 of 2020. It's a little bit different there. So second draw borrowers, let's talk, because you remember you have to have that 25%, at least 1/4 of gross receipts in 2020 over the same period in 2019. So let's talk about what's included in gross receipts. It's different if you're a for-profit entity or a nonprofit entity. It's a little bit more intuitive than you think, but it's still worth mentioning. So for the for-profit borrower, it's basically all your revenue that you think of, and they go based on your accounting method, so accrual or cash, from whatever source. And it actually says from whatever source. Includes the sales, of products, your interest, dividends, rents, royalties, fees, commissions, all of those general things, reduced by returns and allowances. It excludes capital gains and losses, which is important. So if you had capital gains in 2019, but none in 2020, it might seem at first blush you had a drop in revenues, because gross receipts because of that, but we exclude capital gains and losses from gross receipts. And when they look at these terms that I've mentioned up here, it carries the definitions as you would use for filling out your IRS tax forms. It excludes if you collect taxes and remit to a taxing authority on behalf of customers. For example, you sell cigarettes, you collect an excise tax. I think that may qualify here. That is not included in your gross receipts. Proceeds from transactions between affiliates. So if you have multiple companies, one company sells to another, those you have to eliminate those from gross receipts. The amounts collected for another by a travel agent, real estate, advertising agent, conference management service provider, freight forwarder, or customs broker. If you're in one of those lines of business, drill down on this. We're going to exclude the amount that you take custody of on behalf of somebody else. And then I also want to note that all other items, if you're in construction, or some of these other type of things, other items such as subcontractor costs, reimbursements for purchases a contractor makes at a customer's request, investment income, employee-based costs such as payroll taxes may not be excluded from gross receipts. I'm still not entirely sure what that exactly means, but I put this up there because that was specifically mentioned. So if you're a contractor, those types of things, if it might apply to you, you're going to want to drill down on that a bit.
Katie?
Yes.
We have a question in the chat. Just one second and I can find it again. Please repeat the calculation of eligible payroll for the second time borrowers. I thought it was the same formula as PPP1, essentially 2019, 12 months. Our 2020, sorry, scrolling down here. Our 2020 dropped considerably due to government closures, particularly the second closure in November, long after PPP1 had been spent.
Okay, great. That's a great question. So going back there on the eligible payroll costs, it is the same as the first draw borrowers. Basically what it is you can choose the payroll cost. You have three choices. You can choose your eligible payroll cost for the 12 months immediately preceding the application for the loan, or you can choose the eligible payroll costs for 2019, or you can choose the eligible payroll costs for 2020. So if your payroll costs in 2020 dropped dramatically from your 2019 payroll costs, 2019 might be better for you. And you also may want to measure your 12 months preceding. In that specific situation, it doesn't seem like that would be helpful for them. So go ahead.
Sorry, just one other question. If we received a COVID grant from city or state, would those be included in the revenue to calculate the 25%?
So we're going to get into that a little bit. My answer is yes. What is not included in the gross receipts, okay, what's not included, and it's on another slide coming up, what's not included in gross receipts are your PPP loans that are forgiven or your EIDL grants, advances that were made. But I do believe, and I did not see anything else that told me otherwise, because those grants given from local governments and from certain nonprofits, civic community organizations are taxable income, I believe that they are, in general, that is the rule. I do believe that they are included in your gross receipts. I don't know that 100%. That is my hunch and that is my thinking until greater guidance tells me otherwise. I did take care. Okay, so now let's move on to nonprofit borrowers. Some of you may have them or sit on boards and want to offer your opinion of this. They expanded what kind of nonprofits can borrow, which is great in this most recent act. But the gross amounts received by nonprofits, they're generous and not generous at the same time. Gross amounts are exactly what you would think of for a nonprofit, and they don't allow much in the way of expenses to reduce that, which I think is a little bit unfair. So the gross amounts are included are the amounts received for contributions, gifts, grants, and similar amounts without reduction for the expenses of raising and collecting such amounts. Now, some people have fundraiser commissions, grants, you know, they pay a grant writer, those type of things. And so for the nonprofit, they're really only benefiting from the net amount, but they have to include the gross amount here, it appears, for gross receipts. I think we're going to get some further refinement of that and pushback, by the way. It's my hunch, but I don't know that for sure. The gross amount received for dues and assessments from members or affiliate organizations without reduction for expenses attributable to that. Gross sales from business activity. So if they have an unrelated business income activity, that gross receipts are included from the sale of that activity. For example, I use this as OMSI. Everyone knows OMSI. They have a gift store. If they sell a mug and it says OMSI on it and you buy it for $9.95, that would be a unrelated business activity, and its gross sales is included in their gross sales here. The gross amount received from the sale of assets without reduction for cost or other bases and expenses of sale. So if they, you know, they sell a building, or if they sell, you know, or they sell a chair, it's included. And the gross amount received as investment income, such as interest, dividends, rents, and royalties. So they're not talking about taxable income here. They're talking about, you know, you got cash coming in the door, that's included in your gross receipts for measuring if you get to, if you have a 25% or greater reduction in gross receipts. Again, reminder, this is for second draw borrowers that this applies to. So if you have a nonprofit that already applied one time, they have to meet that 25% reduction in gross receipts. And this is a little bit, I believe, unfriendly to nonprofits, maybe for good reason, I'm not sure. Gross receipts do not include, as I mentioned previously, any PPP loans you've had forgiven or the EIDL advances that you may have received. When there is a 25% drop in gross receipts, when do you have to substantiate that? Well, your lender may want information differently, but what the SBA has put out in guidance is if your loan is greater than $150,000, you have to justify that drop in gross receipts at the time of the application. If your loan is equal to $150,000 or less, the SBA says you have to justify it at the time of forgiveness, that you're applying for forgiveness. So a little bit difference in timing, but I encourage you to measure it before you take the loan out. So don't take the loan out unless you do qualify, and then just be prepared to provide that. Again, this link, I'll send the slideshow to Deanna, and this link is in there that will help you get more information on the details of this. Eligible use of proceeds. This we're going to talk about, because if we know what how you're allowed to spend the money, this is going to help you with the forgiveness. And I get a lot of questions, as I said, about what can you use the money for. One of the things that this, the most recent act did, is it expanded the use of proceeds. And I believe the way that they expanded it is because they want everyone to be able to actually qualify for forgiveness. They've expanded some definitions, and it's gotten, it's almost gotten crazy. We don't know what a lot of it means, but it's, I think it's all for the positive. So you have some very prescribed uses of these proceeds, and you should not deviate from the allowable uses. So payroll costs, as we've talked about, and as I said, they've expanded the definition of the health benefits to include in there. And they also expand it to include if you have someone that's on medical or family leave, you can include, if you're still covering their benefits during that period of time, that is still included in the payroll costs. At least 60% has to be spent on these payroll costs for full forgiveness. If you use less than 60% on payroll costs, then you should know right up front you're not going to receive 100% forgiveness. You can still receive partial forgiveness, but you're not going to receive 100%. You can use it on mortgage interest to the extent that the mortgage obligation existed before February 15th, 2020, not on a new mortgage. You can use it on rent as long as the lease existed before February 15th of 2020. I want to caveat here, if you have a self-rental, what I mean by that is you are a business owner, you have an operational company, and then you also own in a separate entity the real estate. If your operational company rents from the real estate that you own, that you don't get to include the rent that the operational company pays under a lease. What that operational company can include for eligible use of proceeds is only the mortgage interest that the property pays for their mortgage. So that's a related party type issue. I bring that up as a nuance. That's not new to this act, but a lot of people aren't aware of that. You get to use it on utilities as long as the service for the utility started prior to February 15th. Interest payments on other debt obligations that were incurred before February 15th. So if you go out and get a new loan, you can't include it if it was acquired after February 15th, but you can if it was around before February 15th. Worker protection costs related to COVID-19. And so if you have to get PPE type equipment, extra chemicals, paying for cleaners to come in, all of those things can be included. Uninsured property damages caused by looting or vandalism during 2020. If there's looting or vandalism in 2021, I don't know if that will be included, but looting and vandalism costs can be used with the PPP loan incurred in 2020. There's some other areas, I call it the kitchen sink because they tend to put in everything. They do have certain supplier costs in there. That appears to be costs that if you have to throw away inventory, such as restaurants, because they closed you down for whatever reasons, but also inventory that you, supplies that you wanted before you applied for the loan, but then couldn't pay for later, then you get to include that. That's a weird one. But then get this, expenses for operations, which is payments for, this is literally what it says, payments for any business software or cloud computing service that facilitates business operations, product or service delivery, the processing, payment, or tracking of payroll expenses, human resources, sales and billing functions, or accounting or tracking of supplies, inventory, records, and expenses. So I don't know what all that means, but it seems like it means a lot. I think we'll get some clarity, but I think what they're saying is if you have to pay for something to stay alive, as a business, then it's likely included. Capital acquisitions, not so much. So don't go out and buy buildings and computers and all of that necessarily. But if you have to, just the operations, the normal less than 12-month value of running your business appears to be included.
Katie?
Yes.
It's about 10:45.
Okay, what slide am I on? I'm on 21 of 30. Okay, we're gonna go faster. So can you use the funds for other purposes? Some people want to take the loans out and not use them on it. And I can only tell you what the Department of Treasury recently said within the last couple of weeks. If you use PPP funds for unauthorized purposes, SBA will direct you to repay those amounts. If you knowingly use the funds for unauthorized purposes, you will be subject to additional liability such as charges for fraud. If one of your shareholders, members, or partners uses PPP funds for unauthorized purposes, SBA will have recourse against the shareholder, member, or partner of for the unauthorized use. If you borrow from the SBA, you throw it into your general bank account. And then you have expenses that are equal to or greater than these funds. I think it would be hard to say you used it for unauthorized purposes. Some people segregate it into a different account for clarity, just to make sure. But if you're going to segregate it into a different account, make sure you actually use that money on the expenses. If you segregate it into a different account and don't use the money, that becomes weird. I'm just telling you. So the applicable covered period, the expenses for forgiveness. So you can use it for these eligible expenditures outside of this forgiveness period. But if you want it forgiven, it's got to be expended in this forgiveness period. And the covered period, it begins on, and this is a slight change from before, it begins on the date of the disbursement of the PPP loan, and it ends at the borrower's choice of a period. It ends somewhere between 8 weeks after the date of disbursement and 24 weeks after the date of disbursement. And that's important because you may be able to keep people employed for, say, 10 weeks, and then you got to let everybody go. Well, that's important for when for forgiveness later. And so you're going to want to choose a pay period that ends at the end of that, or a covered period that ends after that 10 weeks. And so you do get some flexibility. Previously, you didn't have that flexibility. So you may not be forgiven 100% of it. And here's why. There's some haircuts. If you have a decrease in either the salary or hourly wages of any one employee of greater than 25%, or in FTEs, and there are some safe harbors for a decrease in your FTEs. Then if either one of those applies and a safe harbor doesn't apply to you, you receive a haircut. So you'll still be forgiven, but you may not be able to get forgiven for the full amount. Any amount that's not forgiven, you can decide to repay those loan proceeds or use them for permissible purposes. Here's the safe harbors. These only apply to the FTE reduction. There's this general caveat which most clients would qualify for if you did have a decrease in your FTEs. This is directly on the form. And basically it means if either Health and Human Services, the CDC, or OSHA said you can't operate at your full way that you did operate before, starting February 15th and then ending on the last covered period date of your loan, that you qualify for any drop in your FTEs. Most businesses will qualify for this. We are under OSHA requirements right now in the state of Oregon, so most of us are going to qualify for some of this, but not all. And so you have to check your own specific situation. The other is if you did have a drop in your FTEs, but you restored them all back by the last day of your covered period, then you're cool. You don't have to worry about a drop in the FTEs. The amount of let's talk about taxability of it. We always knew from the get-go that the amount forgiven was not taxable income. Normally cash debt forgiveness income, cancellation of indebtedness, you'll hear a couple different terms, that is taxable income. But it is not taxable income, and it will be treated as tax-exempt income. What was in question was the expenditures that you paid with the PPP loan, whether or not you could deduct those expenditures for tax purposes. The IRS was dreadful. US Treasury was dreadful in their interpretation of this. I believe, and most people believe from the get-go, that they were not following the spirit of Congress. So Congress in December clarified their intention and said, basically, Treasury, you're wrong. Those expenditures are deductible. Now, I want to caution you because we don't know how states are going to treat this. For example, California in October specifically said that the forgiveness is not taxable and your expenses are not deductible. I think they were following what Treasury's position on that. Who knows now if they're going to change that back. Oregon currently has a bill. I don't know what the legs are on it, but to include loan forgiveness and gross receipts for your commercial activities tax calculations. So we don't know how states are going to be with this, but if you have, if whatever states you might be subject to tax, then you're going to want to talk with your tax advisor, make sure that they're following the treatment properly. There's 3 different forms out there for loan forgiveness. And these forms were just reissued yesterday, and it is important, and you can just simply go into Google and form 3805S, 3805EZ, or 3805 to find those forms, but make sure you are looking at the January 19th, 2021 version. The prior versions are incorrect and obsolete, and they're out there. The prize form that you want to file, if you can, is a 3805S form. It's a 1-page form. You basically make some certifications on it, and you do not have to submit any documentation with it to say you qualify, although you have to keep that on hand. And it's for loans that are $150,000 or less. And that form is immediately applicable. A lot of banks were suggesting to hold off on applying for loan forgiveness until this form came out. Again, there were prior versions of each one of these forms. 3805EZ is for a loan that's greater than $150,000, and there was no 25% reduction in salary or wages. and there were no FTE decreases, or you qualified for the first safe harbor, which was that catch-all if CDC, Health and Human Services, or OSHA told you you can't operate fully. That's that safe harbor number 1. And then if you don't fit into either one of them, unfortunately, you have to do the long form, which is 3805. I'm going to pass on descriptions of these, except for the, as I said, the 3508 is S is a one, it's 1 page. It's 6 pages long with instructions, but you only turn in 1 page. The 3508 EZ is 9 pages long, but you only turn in 3 pages. The rest are instructions. The 3508 is a long form. It's 13 pages long, but you only turn in 3 pages, and you only use this form if you can't qualify for one of the other 2 forms. And so, any questions before I end on this that I didn't already ask or answer? Is that a no, Deanna? Oh.
Sorry, we have one in the chat from John Gimry. What if our financial institution for PPP1 hasn't updated their forgiveness forms, which are accessed through an online portal? Are we bound to use their available forms as opposed to the current SBA form?
I am not positive. I think the banks will update them because these forms just came out yesterday. I would call the lender, and the reason why I would call the lender and not just simply use those forms, banks can use their own form, but there was on the prior forms, there was an EIDL number on there, and then there were different thresholds for each form before. The EIDL, it used to be that if you applied for forgiveness, say 200,000, but you had a $10,000 EIDL portion in there, you had to reduce, you had to put that on there, and then the bank was reimbursed for that forgiveness amount less the EIDL. That is no longer the case. And so those forms are superseded for a few reasons. So I would call up the bank and see. I do know some lenders were advising clients to hold off on submitting until the new form, at least the 3805S was there, but until the new forms were issued. And because they were just issued yesterday, just call up your bank and make sure they're going to update it as appropriate.
Next question, is the 3805S 150K the cumulative of PPP 1 and 2, or is each round subject to the $150,000 separately, which could give a total of 300K forgiveness? I believe
so. Each loan, each PPP round has to be forgiveness has to be applied for separately. You cannot aggregate them onto one forgiveness form. I believe it is for each PPP loan. It is not in aggregate.
All right.
I think Karen, was Karen asked to be unmuted? For some reason, I was getting that. Oh, it's only when my mouse is there. No, sorry, Karen. I had a thing that said she was asking to be unmuted.
Any other questions? You do. We have a few minutes left.
One thing I'll throw out there, there's been one of the things that the Consolidation and Appropriations Act of 2021 also did is they clarified and enhanced the employee retention credit. I'm not going to get too far into the weeds on that one. That is a whole other very big comprehensive situation. But what happened is if you had a PPP loan, you could also not take the employer retention tax credit. What the new act said is you can do both. So even if you take a PPP loan, you still qualify for this credit, but you can't use the wages that you take the credit on or for the PPP forgiveness, and if it's a wage that you use for forgiveness, you can't take a credit on it. So you can't double dip on the wages, but you can still take advantage of both. So you may have some wages that you're not using for PPP forgiveness. From a strategy perspective, what that means is that if you otherwise qualify for the retention tax credit on your payroll tax forms, you're going to want to minimize your payroll forgiveness payroll allocation. So let's say some people say, I've got a PPP loan and I can meet it all with payroll. You're not going to want to meet it all with payroll if you don't have to. So keep it as close to that 60% threshold as long as you can meet the other 40% with those other types of expenses, so that you may be able to use the rest of your payroll that you've incurred towards the retention tax credit for payroll tax purposes. So, did some other questions just come through?
We did. We had one other question. Given we are on lockdown indefinitely, should I defer applying or get the money quickly before it's exhausted?
So that's okay. So I can tell you what I would advise my clients in general. You have uncertainty. You qualify for that certification of uncertainty. You don't know where this is going. I would apply for the loan, obtain it, and then pay it back if you don't use it or incur the expenses. Pay it back at that point. But at least you've got it secured for when you can, for if and when you can use it. And hopefully your business will come back. That's my strategy. The money can go very quickly, but we didn't, the second time round in 2020, they didn't exhaust all that second time round PPP loans. So that would be what I would advise my clients.
Katie, Eyre, thank you so much. Great, as usual, phenomenal information. Thank you. Taking complex discussion and making it, at least bite-sized and palatable. So, and really important. This is obviously a really important, funding mechanism for many of our small businesses that desperately need this infusion of cash. So thank you for making it easy for us to understand and digest.
Great, and thank you, Deanna. Thank you for the Chamber for being consistent partners as we kind of work through all of this. Blair and I are available. If you have any questions, you can reach out to us. Remember, he does financial statements, and so if you've got some need with bank or issuing financial statements, he's your guy. Any general questions, I'm going to send through the PowerPoint slide to Deanna. You're welcome to ask me questions, but we are ramping up for tax season here. So I suggest if you have your own advisors, seek help from them first, and your lenders, and if you can't get answers, send me a quick email and maybe we can sort through it, whatever it might be.
And we have recorded this program, so once we get it edited, we will send it out with the PowerPoint, and Katie, your star will be born once again. Thank you so much.
Bye, guys.
Thanks. Take care, everyone.